in very interesting times, with inflation that we haven't seen in decades, still running very high, a war in Europe that doesn't seem to cease, an excess amount of leverage in credit markets, and a financial system that showed signs of cracks in US and Switzerland, among other issues. In this volatile environment, what do you see as the most impactful and major challenge ahead? Mr. Sylivanis.
Well, challenges. I could separate the challenges in two, the shorter ones and the longer term ones. Is it on? Can you hear me now?
No.
Now? Hello? Well, in the shorter term, our main concern would be what's going on in China. We do know, of course, that the US has issues. As it seems, it's not going to avoid a recession this year. Bloomberg estimates say that about 70% of the economists are going to believe that we're going to be having a recession by the third quarter of this year. Whether it's going to be shallow or a deep recession, that's the verdict is not out yet. It's very difficult to quantify something like this right now. So we're ahead of recession. The issue of inflation is going to de-escalate, as most probably is going to be the case, and this is due to the fact that we have the base effect from last year where the inflation was very high. So now we're seeing the first signs that the inflation is accelerating. We had a core coming up at 5.3% last month. However, the headline inflation came out a couple of days ago at 4%. By July, the next Fed committee might have a 3 handle on the headline inflation number, in which case it will be very promising as to the future path of the policy. Yesterday they decided to leave rates unchanged. Nevertheless, they sounded a high hawkish bell. However, if they have lower inflation than estimate in their projections, it will give them a chance to keep rates as they are. So inflation will be at bay, possibly. However, recession is not going to be avoided. So this is the main concern. Longer term, we have something positive that's going to come, and this is artificial intelligence, as it was pointed out from your speech before. Artificial intelligence is going to expand the GDP, the global GDP and the American GDP by about a quarter of what already is over the next decade. This is a huge, humongous productivity increase that's going to happen. And at the same time, this is going to be deflationary. However, this is very longer term, and the effects of which will be seen over the next decade, slowly, possibly. But over the next 12 to 18 months, the main issue right here is the recession that's coming in the US and how China is going to support its ailing economy after the reopening from COVID.
Mr. Peppas.
Sure. First of all, thank you for having me here. I think there are many issues currently in the markets around investors and strategists' minds. I'll try to give you the outlook of how we see it, being an institutional investor, having a medium to long-term view. So first I'll start with a short-term view, because this is, let's say, our tactical strategy. Of course, our current worries over the last, 12 months have been the rise in inflation, where we have most likely seen the peak last October, and of course the other part is rates and growth, which now comes into focus. This is, I think, the most important short-term worry of all investors. Personally, I don't believe that we're going to have any deep recession. I think we might have a shallow one. We might already be in a shallow one. In Germany, we were, as we've seen in the last 2 quarters. There are signs that from many, let's say, ratios that we already are in a very shallow recession in the US. It depends. We'll see. It's a very hard question to answer, but I don't think it doesn't smell like recessions we had in the past. I mean, and I don't mean the COVID era recession. This was a specific case, but if we go back, it doesn't smell the same, as a proper recession that has to do with financial aspects, with high leverage, companies exploding, private balances also exploding, and etc. So our main focus is corporate margins.
Sorry
and
to interrupt, but I don't think the microphone is working.
I think it does.
Now
I have
closer.
it okay. Like a singer, okay. And another issue of worry for us is also the situation in commercial real estate around the world, which is quite big, and it involves financial institutions. In the medium term, I think one should focus in the onshoring and the globalization, which is a global trend that is taking place at the moment. It creates a new market, and it will also create opportunities. I think the energy transition and the environmental targets are are going to be a huge problem plus solutions going forward. And of course, the constant problem of supply chains. I think this is something we're going to face on and on over time. In the longer run, I would say again, environment. Environment is a big issue. And secondly, I would say demographics. Old Western world versus the new emerging world, both from Asia and from Africa.
Mr. Kassianidis.
Thank you very much for having me. Good morning, everyone. So I agree with both of the previous speakers, right? I mean, the challenges are endless. So I'll try to stick to one aspect, one big challenge, which I tend to discuss with a lot of institutional investors, from pension funds, big private banks, fund of funds, insurance companies, and so on and so forth. And that is what was mentioned around leverage. So at the moment, we have way too much leverage in the system, right? So from the state level to corporation level, even on a household level. The big question is, how can we withstand this level of leverage moving forward? Can we still continue expanding that level of leverage? Think about the situation, for example, in the States, right? There was an ongoing discussion about the debt ceiling. They've done it a few times. Will they be able to do it moving forward? So how do you go about that? That is a big challenge, right? Because there's different ways of tackling this problem. One is austerity. And I think we all remember in this room, right, what it means, austerity. We don't have the time to expand on that, but certainly, the effects are actually quite catastrophic, both in the short term, but also in the long term. And the other approach is, back to Mrs. Sylivanis' point, is about productivity. The focus should certainly be around productivity, right? How do you basically expand your economic output, essentially, faster than the liabilities? And the key point here is technological integration throughout the sectors. I'm not talking about the tech sector, but integration of technology throughout the sectors, and of course innovation. I wish we had the time to expand more on that, but ultimately I think that is a very important aspect that most of the long-term, especially long-term institutional investors have been concerned about.